Welcome back to another video. Welcome back to Royalty FX Academy, where we learn how to trade step by step, trading 101 with a 7-book series available now on Amazon. Just type in Royalty FX Academy and you will get your collection. Today we're gonna cover some buying setups straight from the book, Volume 1, Success in Sight. Everything and anything that you need to know when it comes to understanding how to buy the market, from zones, setups, trend line, Fibonacci, all that is in this book. So let's just get into it. Okay. All right. So today, since we're going over buying setups, I did some pre-drawings already, so we could go over. But first thing I want to do is I want to go over some rules, right? So since we're covering buying setups, right? Covering some buying setups. All right, boom. We need some rules. With that being said, we got 1, 2, 3. First rule, time frame for your technical analysis. Second rule, time frame for your entry. So let's put time entry, okay? Where rule number 1 was for tech, right? That's for your technical analysis. And rule number 3, price action, okay? So price action, where price is at where price is at a level where it's time to take action, where the market actually give you a specific candle that indicate market is going to go up. Okay, so rule number 1, you want to use the higher time frame, and let's go over these time frames real quick. Okay, let's put this to the side. Well, let's do that again. All right, let's put that to the side real quick. Boom. All right, so rule number 1, right? Time frame for your technical analysis, okay? You want to use, and always want to use, your highest possible time frame, starting with the monthly time frame, give you the overall, see where the market is going, and then the second highest time frame you're using is the weekly, and the last time frame you're using for your highest is going to be your daily. Okay, so for any setup that you're looking for when it comes to trading, as far as how you want to buy the market, either with a double bottom or with a break and retest to buy it, your technical analysis has to be based off a higher time frame. You want to get an overall of where the market is going, and your setups again has to be based off the monthly, where double bottoms, where the market hit a specific area more than once. Okay, we get break and retest after a continuation to the downside. Market breaks a previous low high and come back to retest it. All right, so even if you do get a range in market after a double bottom, right? One here to buy and here to buy. All that has to be based off the higher time frame. These are your rules. Must have them. Okay. Now, with that being said, let's go ahead and look at the first setups. So, as you can see, we have a downtrend market. Okay. A downtrend market, which consists of lower lows, where each low is getting lower than the previous low, right? And lower high, where each high is lower than the previous high. So that is a downtrend market, which is a selling market. So we wait for it to come back down to a specific point to buy up. Okay, let me circle this because this is very important. Market stops here and give us a price action to go up, right? To go up in a bullish trend. Now it's given us high lows, right? and higher high, where each high is getting higher than the previous one. Right here is a lower high, just so you guys understand, okay? It was at this point, market give us a higher high, right? Market continue up, bullish, and then eventually it started selling, right? When it started selling, we got a higher low, and then eventually we started getting lower lows and to match all lower highs. Now, market comes right back to this key level, and that key level is the last area the market was before it bought up. Okay, let's clean that up a little bit, right? Because we're gonna focus on that a lot. Okay, now let's use this, make things a bit easier for us, right? This is the last key level that the market was at before it bought up, right? So it stops here and give us a price action, which is a bullish engulfing. Now, the bullish engulfing is when you get a bullish candle that is bigger than the last bearish candle or the last selling candle. See that? This candle engulf it, indicating that buyers have now take control. Here would be your entry. This is the highest of the last selling candle. This is where the last selling candle closed at. So the bullish close above. This is your entry. Okay. So that's your price action for your bullish. Remember rule number 3, price action, right? The reason why the last indicator that we need to take the trade based off a higher time frame setup. Okay. Now, this is a double bottom. Okay. A double bottom where the market hit one specific level more than once. To be exact, this is an equal double bottom where when the market came back to that zone, it hit exactly that same zone to the left. Now, for us to trade this setup, right? We already know last time market came here, it shot up. Yes, we know that. Now, market came back to the same zone, and this right here, okay? This candle right here is the last selling candle the market gives us, and that's where it closed at right there, right? So what we want to do is we want to look to our left, right? So we want to look at here. Let me clear up a little bit. Okay. We want to look to our left, right? We want to look to the past at the previous low to see what the market did last time before it bought up. Now we look at that to see what price action it gives us. How did it look like? So when market give us the same price action, okay? When the market give us the same price action here, we would enter for the buy. Now, we're looking for a bullish engulfing. The last time the market was here, it gave us a single bullish price action, meaning it took one candle to engulf the previous candle. So we are anticipating, okay? Anticipating, meaning we are looking to see if it give us exactly the same thing, all right? So when market give us a bullish candle like so, okay? Notice how it goes above the red line to close, right? It goes above the red line to close. That right there, at this point, we have a bullish engulfing. We will take this bullish engulfing like so. We would enter here, right? And then we will place our stop loss at the last low. The last low, again, just like before, right? You want to look to your left. Why? Because we're looking at structure high and structure low. When you are buying the market, right? When you buy the market itself, you want to place your stop loss at the previous low point. In this case, right? Look, in this case, you're looking at this lower low here. Okay? You're looking at this lower low. So if the market does this and then give you the entry here, you look to the left to see how low that was. Now, if this is a bit higher as far as when it comes to the price action in the wick, meaning if the market gives you a bullish candle like so here, right? And the wick is very tight, it's very small, there's no really previous lower low. But when the market gives you a bullish engulfing here, this wick is a lot lower than the previous one, so you're going to use the previous low. So in short, when you are buying the market, you always want to use the previous low to place your stop loss, okay? When buying the market, you want to use the previous low to place your stop loss, right? So market give us a bullish engulfing at an equal double bottom, okay? So that's what we're going to do also, by the way. We're going to cover different variations of double bottom and how it looks like. Now, all these setups themselves are straight from the book, step by step, so you can learn to understand how the market buy and how it sells. So this is the first textbook double bottom where both bottoms are at an equal low at the exact zone, okay? Straight to the point, very plain and simple. So now let's go ahead and go look at the second setup. All right. Ooh, yeah. Second setup. So again, another double bottom setup, right? You notice that we have a bearish market where the market is falling, right? And it's giving you lower lows and lower high, right? Remember, a selling market gives you lower lows and lower high. So as you can see, each low is lower than the previous low. Rinse and repeat. I'm repeating the same thing over and over, all right, until it becomes secondary to you, all right? Now, after each lower high, you get a lower low, okay? After each lower high, you get a lower low, meaning when the market gives you a lower low like so, it will give you a lower high. And after the lower high, anticipate the market to give you another lower low, so on and so forth, okay? Now, at one point, the market stops here, goes up to give you an equal high, meaning these two are the same, right? The same lower high because it's the same level, right? And then the market came back down to give you a small double bottom within the same zone. And these bottom part are equal lows that both are lower lows, okay? Now, the market gave us a bullish engulfing. Now, this bullish engulfing is different from the other one. Again, that's also in my book where I go over 5 different variations that the market will give you. All of them are available in the ultimate price action. All right, now check me out. So the last selling candle the market give us look like so, right? That was the last selling candle. Boom, right? Now, for it to be a bullish engulfing, it has to be engulfed by a bullish candle. Now, instead of one candle engulfing it, it took 2 bullish candles to engulf. Okay. You see that? At this point right here, once this candle closed, that's when you know you had a bullish engulfing. It took 2 bullish candles to engulf. Here is your entry. Again, just like before, you look to the left, you're looking for a previous lower low to place your stop loss. Now, if you don't have one, you will use the previous low of price action with the long wick, okay? Stop loss placed accordingly. So as you can see here, there goes your entry, and market started buying up where it started giving you higher lows and higher highs. And just so you guys remember, in a bullish trend or a bull market or a market that's going up, the market structures will be higher highs and higher low, where each high, okay, is higher than the previous high, right? And the bottom part will be high lows, right? Now, each high is going to be lower than the previous one, all right? Well, my bad. It's going to be a bit higher than the previous one, but it's going to be at the bottom of it, okay? It's high lows, but it's below the higher high, okay? Now, eventually, market give us this higher high, right? And then equal highs, right? Another higher high here to go down to give us a lower low, where once it stops here to go up, this point is lower than the previous high low. Now we have a lower low, transition into lower highs and lower low, right? As the market continue to fall, giving us lower lows and lower high. Now, here comes the variation number 2 when it comes to a double bottom, right? this variation is very simple. What's happening is the market itself went to the zone, but it didn't exactly hit the zone like the last double bottom setup, right? It did not hit it exactly the same. Okay. So not every buying setup or not every double bottom is going to look exactly the same. This is how this one look, right? This is variation number 2. It stops here, right? It went up. Boom. Okay. And then it comes back down like so. And then it bought up. You see that? You still get a W shape, a double bottom, but it's just that market then hit the zone exactly how we would like it to hit based on the previous one. So we have to learn to understand the double bottom is not always going to be the same. There's different variations of it. And this is variation number 2. A lot of time, notice the wick. You'll get a wick that hit the zone or that get really close to it. Or sometimes the wick will go extremely lower and then it come back, but the body will be all the way up top. So different variations. So when it comes to your double bottom setup, it doesn't always have to hit the zone. Okay. That's just one aspect of it. Now, with that being said, we looking when market come to our zone, right? We are looking for something like this based on what it gave us last time. Now, we're not going to be so fixated on this type of price action, but we do know last time before the market bought up, it did give us a 2 bullish candle that had to engulf the previous bearish candle to buy up. So that's something we would look for right here. So again, when market comes to a zone, what we do is we look to our left, right? We look to our left to see what it did last time. So when it does it again, okay? So when it does it again, so we could go ahead and enter in the market just to be one with it with the buy, okay? So let's see what my colors. All right, perfect. All right, so here we would have one bullish candle like so, okay? Put a little wick below it, boom, and then there goes the next one. Boom, like so. See that? A little bit of wick up top. Boom. Ooh. All right. So at this point, market have now engulfed. It closed above it. Now we have a bullish engulfing. Right. If you pay attention to that, notice how this one is a lot higher than the previous one because that's what we're gonna get sometimes. A bullish engulfing comes in different formats. That's why this book is important to understand the different variations of a bullish engulfing. Now, once we get this price action here, we don't think twice, right? It is not our job to tell the market what to do. It is our job to simply read and react. The market tell us what to do. We simply just follow what the market gives us, right? And the only thing we have control of is our lot sizes, right? Or stop loss go at the last low. We have no control over that. Here, you enter, all right? Execute. This is your entry point, all right? You enter here, and then you're going to look at the previous low. Again, the same concept. You look to your left, all right? You look to your left because you're looking for a previous low point, a previous lower low to put your stop loss. If you don't have one, you're going to look at the wicks based on the previous candles the market give you, right? Since this one didn't even exactly hit the zone, you definitely placing your stop loss down here. Okay. Very simple. This is setup number 2 when it comes to the double bottom itself. Again, different variations of it. All right. All right. Let's go to variation number 3. Okay. Now, just before I even go over anything, right? When you look at this picture, right, based on what I have been going over already, you should already have some form of understanding what you are anticipating to happen here when it comes to your PA or your price action? What type or what kind of bullish engulfing the market might give us? And you want to know how you know that? Or how would you know? You simply look to your left, right? You study the past, right? Last time market was at zones when it was falling, right? Little trend line, right? We got lower lows, you know that. Downtrend, bearish market. Structural wise, we get lower lows, right? And then we get lower highs, where each high is getting lower than the previous one. Okay? Very simple. All right. Now I drew them out for you. This is the last three bearish candles, right? Market bought up, but before it bought up, it gives you a bullish engulfing. Not any regular bullish engulfing. Not when you get three candles like we have went over before. This is not one of those price action ways, just one bullish engulfing. This is a price action when you get a bullish candle that engulf the last two bearish candles, right? Let me show you how that would look like real quick, okay? So we know we have this, okay? These right here is all bearish candles, right? These are bearish candles. And the bullish engulfing that we got look something like this. Hold up. Look something like this. Okay, you see that? What happened is this bullish candle, not only that it engulfed the last previous bearish candle, which was this one, it also engulfed the last two. Okay. It comes in different formats. All right. The bullish engulfing comes in different formats. Just like I mentioned before, I can guarantee you that it doesn't matter what pair you trade. If you go to your higher time frame, either the monthly, identify a double bottom or a double top. Well, let's just focus on that double bottom. You go to the monthly, identify any double bottoms, right? All of them. And you go to the weekly, identify any previous double bottoms, or go to the daily time frame, identify any previous daily double bottom, and drop down to the H4, the 4-hour time frame. I guarantee you, before the market bought up, it had to give you, or it definitely did give you a bullish engulfing. It just comes in different shapes and formats, right? So you either had the one candle, or let's throw that in there real quick. You either had the one candle, okay? It took one candle to engulf, or you had the two candle. Let's put it more. Let's move this a little bit. I want to have a little bit more room with it. All right. Or you get a two candle price action, right? Where this is your last bearish candle. Okay. And it took two bullish candles, okay, to engulf it. All right. Look at that. Boom. Boom. Entry point here. Let me change the color for that. It got engulfed at this point. There goes your entry point. Here. Oh, here. See that? This is three different variations of the bullish engulfing. All right. It's like three more. It's in the book. Okay. It's free game. Now, back to the double bottom, right? So we know the market itself sold, right? Boom. Stops here. Give us a bullish engulfing. Okay. That engulfed the previous last two bearish candles and then bought up, right? And then eventually, see that it range, see that bounce in between it, range, broke, retest here, and then start selling again, right? This area that the market had stopped and give us a bullish engulfing to buy up, we put a line there. That line is our zone. We don't care for the name. We just understand. We know market stops here. It went up. That's something we understand, not just know, right? It's right in front of us. So we mark that area as a key level for winning if, just like the previous ones, okay? All right, we're going to back to test this a little bit. Just backtrack a little bit. Let me get rid of this. Okay. All right. So just like the last one, right? The market stops here. It went up. Because it stops and went up, we just draw a zone. We mark this key level for winning if. And it did. Okay. And when it did, we look to the left to see what it did last time. Once market give us exactly what it did last time, we join it to go up with setup number 2. Right? Market give us a double bottom here and then it bought up regardless. Key level. Boom. But here it shot up. Because of that, we mark this zone, right? We simply marking it because that's the last point the market stopped at and it went up. And also, when you are looking at your chart to better understand zone, I'm going to be going over that real soon. Next video is coming up. When it comes to your zone, just remember every price action is a turnaround point. Okay, when you put your line chart on, it's going to show you the exact turnaround point. And that turnaround point was a price action point. The market itself, right? Price itself was at a key level, right? And then it turns back around. And the candle they give us was a bullish engulfing, especially for the buy, right? We place our zone. Market came to the zone, didn't exactly bash into it the way we would like to, but it came to it and then give us the same price action, 3 candle price action where it took 2 bullish candles to engulf the previous one to go up. Okay. Now it's the current double bottom setup, right? So same concept, right? Now this is the last 3 candle, right? The last 3 candle. It doesn't matter to me if it engulfed one. Now with this double bottom setup, you're gonna notice that it's different from the last 2, where the first one we had equal bottoms, right? And then the second one we had, the second leg was somewhat shorter, like so. See that? So we had equal bottoms for the first one. And then this one not is equal. It's a little bit higher, right? Now, this one is when the market itself break the zone a little bit, like so. All right. It broke a little bit below. It doesn't mean the double bottom is not valid. We got straight bearish candle a little bit below the zone. We just waiting for a price action for the market to go up. There's no if or but, right? So when and if, okay? When and if the market itself give us a price action like so, boom, right? Not only we had a bullish engulfing, right? Not only that we had a bullish engulfing, we have a bullish engulfing that engulf. Let's put a different color, make it stand out-ish. We got a bullish engulfing that engulf the last 2, okay? Not just one, but the last 2 bearish candles, right? Once that candle itself close, you will go ahead and pull the trigger for the buy. And then you will look to your left like before. You're looking for a previous low and low to place your stop loss. If you don't have one, you're going to look at the wick, whatever the wick the market gives you. Sometimes the last candle of this one can be this extended. Sometimes it could be a bit shorter. Sometimes the price action wick will be the lowest. But regardless of that, when you take your trade, you are using the last low or the previous low for your stop loss. So you enter here. That's your entry point, okay? You enter here, and then you put your stop loss at the low, and then you leave that alone, right? So always remember, we use the 4-hour time frame to take our trade. That means your price action, well, other than gold and certain commodities, your price action should always be available to you at 1, 5, or 9. I'm in Florida, so depending on your time zone. So 1, 5, or 9. So that's 4 hours up on 4 hours, right? So I'm gonna go over that also. When I cover price action again on the next video, you're gonna get that. Okay, so this right here is all three variations of double bottoms, right? If you wanna go more in depth in this and learn to understand how to buy the market more effectively, right? The ultimate buying setup is now available to you at Amazon. Just type in Royal TFX Academy, all right? Everything that you need to know and understand, especially when it comes to buying the market. Remember, this is for you that don't have the time to be on Zoom calls on YouTube, right? This is for you that do extremely well when it comes to hands-on books. Also, Success in Sight, right? Volume 1, this is the workbook, all right? This right here teach you the ins and out when it comes to trend lines, the zones, how to mark all of this. That way you truly understand, that way you really do learn to master the market the way you need to. So when you finish this book and you go on the chart, you're gonna feel like you've been trading for years, all right? Because you understand why, all right? You don't just know this is where you place the zone. You understand why you place in that zone there, okay?